Ladies and gentlemen, what if I told you there is a small cap AI stock that has very little institutional ownership besides Citadel that just bought 7% of the company, that reports earnings in about 2 weeks from today, that is disruptive to retail, okay? There's no other company that is targeting online retail with AI. So there's essentially no competition for this company, that is also involved in crypto transactions, and that's more of a long-term thesis. What if I told you this company had 38% of shares owned by individuals that work at the company, meaning if they do well, you do well. If you do well, they do well. The financial incentives are almost perfectly aligned, unlike many other companies. What if I told you this stock, this company, has already exceeded their own full year guidance, that is set to be profitable by the end of the year and likely raise guidance further? What if, on the just for the cherry on top, what if I told you this company is trading at a half or a third of some of the more well-known AI stocks? Would you say that would be a good buying opportunity? Well, I'll leave that up to you. I do own about $80,000 worth of this stock. And I do think in the month of August, it's game over. People are going to know about this company because of the rally that I think is going to take place. Here on screen, you could see what this stock's chart looks like. Okay, it looks very good. We could soon be over $4 per share in my view. The stock is $3 today. And honestly, following earnings on October 21st, you could see the stock well into the $5 range. Now, I've talked about this stock on the channel. The stock we're discussing today is Rezolve AI. Virtually nobody knows this company exists. Okay, the pumpers don't talk about it on YouTube. It's very dry on StockTwits for the most part. There's a little bit more attention now on the company since it went from $1.07 to $3. It was $1.07 back in April. So it has done pretty well in the last couple of months, but we're only scratching the surface here. This company's about a $700 million market cap. Now, the reason I am making this video today is to share with you some of the recent news, get you caught up to speed, but we're also getting a lot of 13F filings that are coming out. And what we're seeing on those filings is absolutely impressive. So we'll start there. And shout out to the trading community that actually alerted me to this. No and Talon over there, and Connor and Brock, and all of you guys are awesome. So if you're seeing this video, make sure to report back in the group. But what we're seeing here is incredible. Okay. So it's important to know there is some red here on the screen. Okay. What I imagine is some of those firms that bought the stock at $1 probably sold out to some extent when the stock went up, 200-300%. Okay. But there is a lot of huge positions and new positions that were added in the last quarter. You can see here the Police and Firemen's Retirement System of New Jersey added 20,000 shares, a brand new position. Look at this. Geode Capital Management increased their position by 1,100%. We can actually figure out the cost in which they paid for their shares. Okay. They reported about $3.8 million worth of the stock and about 1.235 million shares. So when you plug that into the calculator, you actually get an average price of around $3.07. Like, okay, a little bit of valuation support, if you will. If they felt comfortable taking a stake at $3, then makes me a little bit more comfortable with that. Okay. You have all of these new positions, 48,200 shares, 1,000, 18,000, 13,000. Wedbush Securities has a new position. or same position, 14,000 shares here. Bank of New York Mellon just bought a brand new stake, okay, worth $541,000, 175,000 shares. Simplex Trading added to their position 4,000%, boosting this stake to 75,000 shares. Wolverine Asset Management boosted their stake by 2%, now owning 22,000 shares. Brand new 3,000 share position here, 17,000 share position here, 5,000 shares here, 10,000 shares here, 18,000 shares here. They did sell out, and this one sold out. But you can start to see what I'm talking about here. Look at all of these new green positions. Even look at this. Wilton Capital Group increased their position by 80%, now owning 132,000 shares. Morgan Stanley increased their position by 12,634%, now owning 81,000 shares. Okay. Citadel, which just bought about 7% of the company, also bought a call position worth 45,000 shares and a put position worth 22,000 shares. Okay. Susquehanna, I can never say that one right, bought a call position worth 77,000 shares and a put position worth 11,000 shares. Okay. Like, lots of well-known firms that are starting to realize what's going on with this company. Virtue Financial owns 36,000 shares. What's actually interesting, though, if you look at the breakdown of ownership, there's only institutional long positions of about $7.75 million. They only own about 1.61% of the shares, according to this here. And it actually says the long position is up 41% in the last quarter, and institutional ownership is up 51.35% in the last quarter. Now, the big thing worth mentioning before we get into some recent news is why hedge funds and institutions in Wall Street has stayed away from this stock. Okay, it's nothing to do with the company. Let's acknowledge that. It's nothing to do with the company, but they IPO'd via a SPAC back in August of 2024. Yeah, around August 17th. That was their biggest mistake, according to the CEO. Okay, because SPACs have a lot of restrictions. Insiders can't sell, they can't buy. In fact, the CEO says he wants to go out and buy shares once his restrictions are over with. And I imagine people internally at the company have the same idea as well. They can't do that yet. And SPACs have historically very poor returns over the next 12 months, right? The first 12 months of a de-SPAC, when you're going through the de-SPACing process, they don't tend to perform well. What's very interesting is, yes, the stock has started to perform very well because the de-SPAC is almost over with, okay? Obviously, there's been a lot of good news. The company is just doing exceptionally well, okay? That's the reason why the stock is starting to work. But the de-SPAC ends on August 17th. The company reports earnings on August 21st. Call me crazy for this. I don't think Citadel just bought 7% of the company if literally just bought 7% of the company within the last week or so, 2 weeks or so. I don't think they would do that if we were about to get a bad earnings or disappointing news. That to me doesn't make a whole lot of sense. Okay, this was a private placement. Okay, so August 21st, I think is going to be a big day. I actually think the company is going to raise guidance again. But here you have some of the recent news. Strong growth. Okay. Rezolve AI exceeded $50 billion in gross merchandise value processed during the first part of 2025. Keep in mind, they just launched commercial sales at the start of 2025. They spent 9 years building the company. It was founded in 2016, long before AI was popular. Okay. Processing an average of 3.3 billion per week. They achieved 70 million in annual recurring revenue, or ARR, ahead of schedule, and are on track to surpass 100 million ARR by year end. So basically, the company in the beginning of 2025 said, hey, we're going to set guidance at 70 million ARR. They already achieved their full year guidance. They came out last earnings and said that they are on track to surpass 100 million ARR by the end of the year. I think they're going to come out this earnings and say they're on track to reach 120 to 150 million in ARR by the end of this year. Okay, so I think you are going to get a guidance raise. Okay. Index inclusion. Rezolve AI was added to the Russell 2000 and Russell 3000 indices in June of 2025. Investments. Citadel led a $50 million strategic investment in Rezolve AI in July of 2025, aiming to accelerate AI-powered retail solutions. This followed a $50 million private placement earlier in the month with 2 institutional investors. Again, Citadel was a part of that. This is, as the CEO put it, commitment capital. Okay. These institutional investors are going to hold the stock. They wanted to buy the stock and they wanted to hold it. What's interesting is this private placement was placed at about $2.50. So they didn't get a deal on the stock. They got a slight deal, like a 10-cent deal. Okay. But they really didn't get a deal. Okay. So that's worth mentioning. Now, the company reaffirmed its commitment to a $1 billion Bitcoin treasury strategy in July of 2025. That's probably the thing I don't like the most about this. I hate when good companies add crypto to their balance sheet because then they start to trade like a crypto company. I don't want to see that. Although I think the valuation of this company is going to far exceed $1 billion. Like, I think it's kind of going to be one of those like Tesla-like things. Like, Tesla owns Bitcoin. Does it trade based on what Bitcoin does? No. Okay. So if I had a gripe to pick with this company at all, it's the fact that they are committed to buying some Bitcoin. Don't exactly love that. But again, end of the world? Absolutely not. Okay. Considering the company is only a $700 million valuation in general or market cap, yeah, fine. Do what you want, okay? Now, stablecoin support. Rezolve AI announced support for stablecoin transactions in July of 2025. Now, strategic expansion and partnerships. Their global services division. In June of 2025, Rezolve AI launched a new global professional services division to address the growing demand in the enterprise AI market. This division, headed by former Accenture Global Commerce Head and Tata Digital CTO Banjiri, provides AI advisory, data assessments, and model training and optimization. So this is a $500 billion market on top of the online retail market, which has a global transaction value of $30 trillion a year. The total addressable market size that Rezolve is targeting almost accounts for forever growth. Like, there's no shortage of growth for this company for many years to come. Okay. That's, again, one of the reasons I feel so confident making investments among all of these other things. Okay. Major partnerships. Rezolve AI has strengthened its partnerships with Microsoft and Google. Their brain power large language model is integrated into Microsoft Azure, and its global reach is expanding via the Google Cloud Marketplace. These partnerships leverage established sales channels for Rezolve AI's Brain Suite, which include personalized shopping assistants and AI-powered marketing tools. Google and Rezolve AI will co-invest in global marketing and innovation initiatives. Rezolve is Google's strategic partner in conversational commerce due to the functionality of its Brain Suite. They also have a Tether collaboration. Rezolve AI and Tether have collaborated to integrate the Brain checkout service into Tether Wallet to support cryptocurrency payments and eliminate merchants' fees. This I see as more of a Hail Mary. Long term, it could be very successful, but it's not something I pay too much attention to right now. Okay, but they basically want to make it seamless to pay with crypto at retail locations, instantly settle transactions, basically make it a lot smoother for everyone involved. Okay. Now, product development and acquisitions. Group buy. acquisition. Rezolve AI acquired GroupBuy in March of 2025, a commerce search and product discovery platform that drives over $30 billion in annual sales. This acquisition strengthens Rezolve AI's capabilities in AI-driven commerce, site search, and digital engagement, according to Rezolve.com. Rezolve's AI Brain Suite offers personalized shopping assistance and AI-powered marketing tools, aims to enable seamless personalization shopping experiences for retailers worldwide. Rezolve AI serves over 50 enterprise customers, including Liverpool, Phoenix Suns, and KFC, with 16.5 million active monthly users across 42 million devices. Okay. Such a no-brainer. This is such a no-brainer investment. It's crazy. If you go to the website, you'll see kind of like demos of what they're doing, right? You ask questions, it brings up recommendations. Okay. In my view, there is no reason any company that sells anything online would not partner with Rezolve. They say that they can boost online revenue 10%, average order values increase 8%, and 25% higher conversions. Why would you not partner with this company? There's nobody else you could partner with. There's really no competition for them. Okay. It's a easy choice. Okay. So what I'm getting at here with all of this, I think this is really one of those rare opportunities that is overlooked by Wall Street. In my view, I think after earnings, we're going to start hearing a lot more about Rezolve. There's going to be a lot more people talking about the company, and I don't think the threes are going to last all too long. I mean, even just look at the chart. It looks very good, even for a market that has went through a little bit of trouble in some of the small cap areas, you know, in the last week or two. Let me know your thoughts on that down below in the comment section. But with that said, if you guys want to come join the trading community, check that link out down below in the description of this video. We will go over some of your news as well for the broader market here in just a moment and give you a basic rundown of what to expect as far as earnings and economic data coming out this week. But also in the news over the last, 24 hours or so, Trump announced that he will announce the location of the Russia meeting. He did, in fact, announce that to be in Alaska this Friday. Donald Trump says we will have a meeting with Russia and we are getting very close on Ukraine. Trump says that Putin would like to meet as soon as possible. I mean, I think, these two just respect each other. And Donald Trump said yesterday that Zelensky needs to get ready to sign something. Trump said yesterday, we are looking to get some territory back and do some swapping. And Trump says the Russia-Ukraine war could be settled very soon. And apparently US, Ukraine, and European allies to meet in the UK over this weekend. And it was reported that Putin will halt the war in exchange for eastern Ukraine. Zelensky responded today and says choices that exclude Ukraine are against peace. Zelensky says he's ready to collaborate with Trump for genuine, enduring peace. And look at this. Zelensky says Ukraine won't surrender land for peace. Ukraine and European powers oppose Russia's proposal on Ukraine. Here's the deal, okay? Whether you care about this conflict or not, we're going to focus on what this means for the markets. And I'll share my opinion here from what I think is Trump's kind of view on this, okay? If you can have a meeting between Trump and Putin and they say, hey, we want this territory, we're willing to negotiate what territory, and Zelensky says, nope, we're not giving up any, that's just unfortunately not realistic, okay? And at that point, Zelensky is the one that is holding up the conflict from ending. I think from Trump's perspective, that's when Trump is going to say, hey, I tried to do what I can do. It's not working. You guys fight it out. You can't really put secondary tariffs on Russia if Russia is the one that is trying to end the conflict. Now, understandably so, Ukraine doesn't want to give up territory, right? The fact of the matter is, if they don't control that territory right now, it's in Russia's control. Technically, do they still have it? Probably not, okay? And it's very unrealistic to end a war and not cede some territory if you are on the quote-unquote losing side of it, okay? Which Ukraine has done very well. You got to give it to them, right? But they're not on the winning side of this, okay? It's unrealistic to have Ukraine back out and not have any territory from this, okay? Just to play devil's advocate, okay? You can understand why Ukraine feels this way. You can understand Russia's intention. From a market's perspective, I think Zelensky being the one to hold this up and not Putin is good news, okay? Because Wall Street does not care about the war in Ukraine at all. I mean, if it were to end, could it give markets a little bit of a boost, like 0.10%, 0.2%, something very nominal? Sure. But there's like zero fundamental number impact to how that affects America's corporate earnings, right? Which is ultimately what matters to markets. The issue has been, and where some of the nervousness has been that I've even expressed here on this channel, is that if Putin is the one that holds up the war and Trump tries to essentially say, hey, countries, you can either do business with Russia or you can do business with the US. And if Trump starts to throw these tariffs on China, India, all these other countries that buy Russian oil, that's where the problem is. In fact, if Zelensky is the one that holds up the, peace in Ukraine, essentially, then even maybe India's 25% tariff could be relieved from them. I don't know if that's going to happen, but it doesn't matter. It's all about China. It doesn't look like China is going to get any secondary tariffs for buying Russian oil if Zelensky is the one holding this up. Okay. That is great news for the stock market. That was one of the biggest hurdles I think we could have faced, was like an additional 25 or 50% tariff on China for buying Russian oil. That would have been very bad for markets and potentially been a big speed bump for the stock market. At this point, it seems highly unlikely to me that that is going to happen now, because it already looks like Zelensky is not open to giving up any territory. So, yeah, conflict. You can have your opinions on that. We all have our opinions on that, and that's fine. But from a market's perspective, the only thing that matters is we don't get those secondary tariffs on China. And I don't think that's going to happen if Zelensky is the one preventing the war from ending. And honestly, why would you not want to end the war at this point? Like, you're not going to win. You're not going to get all the territory back, right? Like, what's the point? Just let's move on, develop Ukraine, make it a beautiful place to go again, get some economic stability in that country, and kumbaya it to the end of time, But again, maybe I'm just a sucker for peace. And I think, getting people some peace, man, like letting people live peacefully is so powerful. Like, in fact, I grew up in a really, really bad city, Flint, Michigan. Okay. I ended up moving hours away. Long story short, I had a, pregnant girlfriend at the time, and we woke up to, neighbors just, pew, pew, pew in the front yard to like wake the people up that live there. Like, crazy. It's just absolutely wild. And the next, month to two, I committed to buying a house elsewhere. I didn't care what the price was. I didn't care how this house looked. I never even went to see the house. The first time I seen the house that I moved into, I don't currently live there, but I rent it out. The first time I looked at that was when I was moving my things in a U-Haul, okay? Maybe I'm just a sucker for peace, but peace of mind is so valuable. it doesn't make, I guess it doesn't make sense to me. And feel free to share your views on that down below in the comment section if you would like to. Nonetheless, I want to give you guys a brief little rundown of earnings we're going to have for this upcoming week as well. We'll talk about this a lot more in depth in the video that comes out tomorrow on this channel. But I really want to highlight there's a lot of momentum stocks that are going to report earnings, like AI stocks as well in this upcoming week. First and foremost, on Monday, this is perfect. You have Monday.com that reports, Barrick Gold, and some others pre-market. In after hours, you have Big Bear AI, Oklo, AMC, AST Space Mobile, Archer Aviation, Plug Power, GoPro, and some others. Tuesday pre-market, you have Circle, C, Pony AI, Copen, PaySafe, Cardinal Health. Tuesday and after hours, CoreWeave, Rigetti, Kava. Mediterranean sounds so good right now. I'm not even gonna lie to you guys. H&R Block. Wednesday pre-market, you have honestly not really any notable names. Arcos, Dorados, biggest McDonald's franchise in Latin America. Wednesday and after hours, Cisco, D-Local, Red Robin, some others. Thursday pre-market, JD.com, John Deere, Advanced Auto Parts, Birkenstock, Weibo, and then on Thursday and after hours, Applied Materials, New, Gambling.com, and some others. So really AI momentum, you know, that's going to be a theme for this week. And these are only the largest, most notable names. There's going to be a lot of others in that smaller cap, you know, AI theme as well, where we focus in the trading community that are going to report this week. And even for the next couple of weeks, there's going to be a lot of earnings with those momentum names, with those smaller companies. They're not going to move the broader markets, but they could move your portfolios for sure. And in this upcoming week, as far as economic data, on Monday, you have some bond auctions, but that is pretty much it. On Tuesday, you have CPI. So you have core month over month and year over year. This is going to be very important for, you know, Fed rate cuts. We're already pricing in like a 90% chance of a cut, 86.6% chance of a cut in September. As long as that number is not too high, it's not going to change things all too much. If the number comes in really low, then it could raise the odds of cuts for October, which is currently pricing in a cut at 57.5%. But again, if you get a really hot CPI report, maybe you unprice in that second cut. If you get a really good CPI report, maybe you start to price in a larger chance of 3 rate cuts this year. December 10th currently is pricing in a 44.2% chance of a cut. So technically the highest odds favor a cut September, October, and December. But the odds of only 2 cuts by December is 42.5%. So CPI is definitely going to move these odds the most, and I think be, you know, most impactful between, are we going to get 2 cuts? Or are we going to get 3 cuts? Okay. Some Fed speakers as well. On Wednesday, a bunch of Fed speakers. Again, do they flip-flop? We've had quite a few Fed speakers that have flip-flopped recently. We've talked about that here on this channel. On Thursday, you get PPI month over month, initial jobless claims. Again, a bunch of Fed speakers, some data out of Japan. And then on Friday, you get retail sales month over month. Very important data point right now, since Wall Street is concerned about, you know, growth slowing down and kind of a little bit of a growth scare going on right now. And Michigan consumer sentiment will be coming out. What you really want to see is 5-year inflation expectations and 1-year inflation expectations fall. You're expecting those to rise quite a bit in this Friday's report. Keep in mind, it's only like 200 people that tend to be highly political that respond to this survey. Okay, so Wall Street might care about it. It's not something I care about. Let me know your thoughts on all of this down below in the comments section. Hit that like button, subscribe to the channel if you have not done so already. Check out that link down below in the description of this video for the trading community. With that said, have a great weekend, and I will see you in the next one.